Hello, hello. It's a brand new month, 1st of November. How is everyone doing today? Hope you're all well. Yes, the EU and the UJ worked out very nicely. Thanks for that, Ayakame. How you doing? Hey, Ismat. Hey, Jambi. How are all of you doing? Hope you're well. Again, if you are here on the stream, if you're new to the stream, do drop a message, say hi, let me know that you're here, let me know where you're joining us from. The link is there for the Discord channel. If you haven't already joined us, I don't know what you're waiting for. The link is there. Make sure you click and join. It is absolutely free to join. That's where we can take our discussions beyond this daily market analysis into through the day. Well, through the day, as we look at any trades or as I look at any possible setups or news events, surprise news events, we'll let you know on the Discord channel. Good morning, Pips Apprentice. How are you doing? So, quick risk disclaimer first before we kick off. This live market analysis is sponsored by Max Global Markets, a brokerage firm that is registered with and regulated by the Monetary Authority of Singapore, the MAS. Max Global Markets has no control over or influence over the content of this analysis, which is generated by independent party myself. Please remember that the information in this analysis is offered solely for educational and informational reasons and does not constitute financial advice. So please, before you jump into any trades, check your lot size, check your leverage, check your margin, make sure it fits with your own analysis as well before you jump into any trades. All right. With that said, we'll start this one as well. Hey, Craig, good to have you join us. Welcome to the group. Do make sure you join us on Discord as well, Craig. Happy to have you. Hey, David, good morning. How are you? And for everyone on Discord, if you're watching, do drop a message and say hi. And through the session, if you find this useful, interesting, informative, please help me out. Click that like and subscribe button on YouTube and on TradingView, that little rocket ship button as well. And if you have any questions, put it into the chat. Let me know. I'll be happy to help you through your questions as well. All right. So, sound very low, or is it just me? I don't know. What about everyone else? Is it soft for everyone? Oh, it does seem a little bit soft. Hang on, let me see. Okay, is this a little bit better? Um, it does seem a little bit low. Give me 1 second. Check this. I've kind of maxed it out right now, so it is very soft. Okay, let me see what I can do about that. It was working. That's odd. It was working quite well just then. All right, how about now? Is that a little bit better? No. Can tweak that some more. Okay, that should be nice and loud now for you guys. Just to... No, the mic is still here. Okay. Let's see now. Does that work a little bit better? Test, test. Sound check. 1, 2, 3, 4, 5. Let me know. Let's see how it goes. It went off for me on TradingView, and now watching on the phone, it seems okay. It's a tiny bit better. All right. Just thinking, what can I do? What else can I do? Okay, let's see if that's gonna be a lot better, a little bit better. Okay. All right. I can barely hear it, to be honest. Okay. All right. I hope that's a lot better for you guys. I've maxed out on everything. Okay, so let's hope that's better for you guys. I'll try and speak up. I'll try and speak into it a little bit more. Put headphones now. That works better. Okay. Yeah. Okay. Thanks for that, Robbie. Thanks, Kame. Thanks, David. Good. Okay. I maxed out on everything, so it might suddenly become deafening. Well, let's see what happens. All right. With all that, I forgot where I was. Okay. What happened? What happened since we last spoke? Okay. Yesterday, BOJ, we spoke about that already. If you want to find out more about the BOJ, what happened, how we traded that, check out yesterday's video on that. Today, last night, we did have the Canadian GDP was 0%, expected 0.1, came out at a 0. So you see that on the Canadian dollar, the loonie, we didn't actually see that strengthening because it stayed at 0. So we saw that weakening on the Canadian dollar paired with the strength of the dollar. All right, strength of the dollar, which you see right there. Right, the strength of the dollar right there. Um, Not because, and it's easy to look at the strength of the dollar and then start thinking, why is it strengthening, and start drawing reasons. It's not entirely because of the employment cost index, which came out at 1.1, expected 1, or neither is it because of the consumer confidence number, which was a 103, got revised up to 104, and it got released at 102. All good numbers. These are all good numbers, but it's not the main reason why we saw the dollar index pretty much rocket off that 106 level back to that resistance level of, I don't know why I say support, that resistance level of 106.90. All right. This push to the upside, I believe it's really because of the market's view that the dollar index is less, or the FOMC is less likely to increase rates further. It's less likely to cut rates. It's more likely to stay constant, right? Stay constant, but might have some hawkish tones coming on the meetings later on today or early tomorrow morning. So that's why we saw the dollar index push quite strongly to the upside last night, pretty much from 8 o'clock onwards, 8 p.m. GMT plus 8 onwards. We saw it bounce off that 106 level straight up, almost straight up towards 106.90. With that, early this morning, we had Kiwi dollar, or Kiwi with their employment numbers. Not great news in this case. Was 1%, came out at minus 0.2%. But what you notice as well, at 5 a.m., that move, it just popped out. And then after that, just came right back up, and still essentially did not have too much of a move, right? Because that 1 hour was at 5825, it dropped down to overall 5789, and then bounced right back up again. So some impact, but not sustained, because it's at that time, and because we're seeing that dollar strength in play. And then 8:15 p.m. GMT plus 8 tonight, we do have the ADP non-farm employment change number to be released. Was 89K, expected 149. So this week is actually quite an interesting week. Why I say that is, from memory, I don't remember when was the last time we actually see a FOMC meeting lead into a non-farm employment change number. Usually, you'd see a non-farm employment change number, and then a week later or a little bit later on, 1 or 2 weeks later, you'd see the FOMC meeting. So this is a little bit odd that we are seeing a non-farm employment change number, the JOLTS jobs openings later today, leading into tonight at tomorrow morning, 2 a.m. GMT plus 8, the Fed funds rate 5.5%, most likely going to hold at 5.5%. Okay, so a little bit odd because of this, because of what's happening, what's going to happen here at 2 a.m. GMT plus 8, I believe that these events, the ADP non-farm, typically a little bit higher volatility is going to be a little bit more muted, right? 89K to 149, it's possibly going to come out around that number, I think. But we're not likely to see a big move on prices because we are possibly setting up towards this news event. Same with JOLTS jobs openings, 9.61 million to 9.34 million. A small drop in jobs openings, but also I think markets are all tuned towards the Fed funds rate. And if you look at this now, the CME2 Fed Watch 2 is at 97.7%. So it was 98 point something percent yesterday. Now it's dropped a little bit to 97. 2.3% chance of a rate cut. I think we're most likely going to see rates stay at 5.5%, around benchmark of 5.5. Okay, so that's what we're watching or we're heading into in terms of watching the news. With that, tomorrow we do have CPI numbers for the Swiss, and very importantly, the Bank of England with their rates decision looking also to hold at 5.25. But for the Bank of England, it comes down to the way it's being voted. I'll tell you more about that tomorrow. So if you want to trade the Bank of England rates decision, do make sure you tune into tomorrow's session as well. With this, what I'm anticipating now is that it's going to be a little bit quiet because we have the French and the Italians on a bank holiday through to 8 and 10 p.m. where we have the US news, which might be a little bit muted. I think that we might see some strength onto the dollar with rates being held at 5.5%, showing some stability. I think there was a news headliner. Where was it? Let me see. I was reading something just then where it was saying that. Let me find it. Give me a second. Let me just find it. There we go. I like this line there from where it says that continue without supporting. Where was it? Okay, there we go. My sense is that Powell is going to want to be very measured and careful about sounding too hawkish. He's managed to thread the needle here very well. Okay, so that's quite interesting, is that keeping rates at a current level, they might be on that borderline of being a little bit hawkish, but they don't want to try and push markets too much. So I think that we're going to see a little bit of a controlled press conference coming from the Feds later on. Okay, so what that means on the charts, right? Yesterday we were saying that, well, today being the 1st of November, all right? Before that, good morning, Diana, how you doing? Hey, Jimmy, hope you're well. Hey, Rakibul Alam, how you doing? Good afternoon. Hey, Mady. Hey, Goju. Hey, D-Train. Hope you're well. Good to see you guys. Okay, so yesterday we were saying that the dollar index was around that 106.30 level, may trade down towards 106 support level. held by that 61.8 fib retracement. That's worked out very nicely for us. It came right down to that fib 61.8 level and bounced straight right back up. Okay, so we can take this 50% level away because it's been broken, but 61.8 has been respected and held. Now that it's bounced back up from that 106 towards that 106.90 level, what's happening here is, or what's likely to happen here is that I think it's going to, let me see, tomorrow's news at 2 a.m. is right there. Okay, this is where the FOMC decision is going to be released. And I'll show you this, so let's scroll back to what happened the last time round, which was on the 21st of September. They held rates at 5.5% as well. Okay, so let's go back to, and I think I have it there. 21st, nope. Give me a moment. That one. All right, so you see that on the 21st of September at 2 a.m. right there. Right, dollar was pushing down through the day. 1 a.m. set at that 104.68 level. 2 a.m. come out. They were controlledly, is that a word? Controlledly hawkish, controlled on the hawkish tones, but they did hold rates at 5.5%. What we saw was the dollar index bouncing off that support up within the hour, 2 hours, through to the morning, reached up to that 105.60 level. So in this sense, we saw a move of about 90 something pips to the upside within the first 2 hours, a good 60 pip move to the upside. Okay, and don't anticipate an exact replica, but maybe something along that line. So with that, now coming back to the current, what I anticipate is that we're going to see the dollar index sit along this level. Okay, sit along this level. If you test this out, let's have a look at it. Oops, where's my... Right, you can see that 23.6 is being held, is being respected. I think that we're likely to see that, or see the dollar consolidate along this point. Right, consolidate along this point, maybe push down a little bit, but along this area before a 5.5% decision is likely to see the dollar push up. Where's my arrow? Hang on, I lost my arrow. Okay, push up, possibly towards that 107.25 level, right? And that's in reference to the points that we saw here, or we see here from the 4th of October, early October. So what I anticipate here on the dollar is that we may see it consolidate along 106 dot, oops, hang on a second, something there, okay, 106.70, consolidate along 106.70, FOMC decision, push to 107.25. Okay, so we're going to see it sit around there, and then a breakout of this point could see it get to 107.25. Overall, looking at the strength of the dollar, to come around following this decision from the FOMC. Okay, that's what I'm looking out for. There are, this previous high to break, which is quite close. So I do think that if it breaks, we could see that move. A similar, this would be about a 40 something move to the upside if you caught on to this top of that previous swing high, then it would be that almost 60 pips that we saw the last time round in September. Okay, so we're looking at something similar, maybe not exactly the same, but something similar to get towards that resistance level. I could even update this to say 107.35. All right, there we have it. And it could even break up even more through, the first move was at 60 something pip, but it could continue up towards that 107, but we'll see after the first move. Okay, so with that, what it means across the board is that now on the Kiwi dollar, that trade did not trigger, take that away. That's broken. That's done as well. Looks like a double top on the dollar index. It does. It does look at a double top in this case, but I think of that, there is a chart pattern, but I would place chart patterns secondary to a fundamental news event. We've seen what holding at 5.5% could do, so I think that if it does repeat at 5.5, yes, there might be a double top, but it could also break and negate that double top. Okay, good spot there, Spiros. So what I'm anticipating here on the Kiwi, it's a bit odd that you're seeing the dollar index push or sit there a little bit, and the Kiwi dollar is pushing back up. Okay, so let's update this a little bit. I have these levels, that's fine. I don't think this would be, just check on H4. This is this point here, okay. Back to the H1. I can take this away for now. And let's have a look at this. I want to catch this point. No, let's take this away for now. And 5.8 is right there. I don't like that there's no big clear levels. And then what I'm looking out for here is that we are seeing it retrace. And it's coming to that 50% level. So what could happen here looks like you do that, right? That's being supported. 61 is right there. I'm trying to figure how far, if it's going to continue retracing back up, sit around this level before turning back down. See, dollar index is not doing too much. Why is the Kiwi moving that strongly? Looking at the Aussie dollar, it's bouncing back. It's sitting along this level, which is broken. Okay, so Kiwi dollar now looking at this, what I would be anticipating. And we'll do a good news, bad news scenario, okay? You can be looking for a move like that, right? For it to now retrace, break, test at 61.8 level, reject and turn back down. So I would say about what 5830, which is right there. So test and reject 5825. Stop loss, take profit 30 pips. Stop loss no more than 15. I would like to see it go up a lot more, but I just don't see why it should go up by that much. Hey, Jelly, how you doing? Yeah, so I would like to see it go up a lot more just so that it fits a better setup, but I don't see why it do that. So I'm looking at either this move. Okay, let's look for that. On the dollar, on the Kiwi dollar, what I'll be looking for is if, right, we're anticipating that dollar strength. Let's say that, hey, it doesn't come around, it pushes down, then we might see the Kiwi dollar push up, test that resistance, and turn back down. Okay, so that's what I want to see on the Kiwi. I don't want to be trading right in the middle, so I would either be looking for that move. That resistance has held quite well, 5870. So 5860, stop loss 20 pips, take profit down to 60 pips. I'll be looking for that on the Kiwi. It's going to take a little bit longer, but something to look out for. Okay, so Kiwi dollar, we're looking to sell on 0.587 5860 to 60. 5860, stop loss 20, take profit 60. This is looking at some dollar weakness to start. Okay, we're not looking at that big push. We're looking at, hey, if the dollar pushes down, then we're going to see the Kiwi dollar push up strongly, but most likely going to be held by this resistance. This is a good, almost a 60 pip move. Let me see how far. This is a good 60 pip move to the upside. It's most likely going to hit that level and then turn back down. So that's what I'll be looking out for on the Kiwi dollar. Okay, then onto the Aussie. We can put in that 50%, which is 61.8. So not 50 because those are broken. You see that 61.8 has held. So because of that, and we see this point noted, is that we think that it might sit there, and then if it does break down, you can be looking at below 0.63. Stop loss 20 pips, take profit, good 60 pips to the downside. Right, so it's going to sit, what I'm thinking here on the Aussie, is going to sit around here on the news release at 2 a.m. We might see that dollar strength scenario immediate. You see the dollar spike to the upside, then you're going to see the Aussie dollar spike down. So that's where you can be looking for that move below 0.63 to continue lower to 6240. All right, so that's what I'll be looking out for. Aussie dollar to sell 0.63, stop loss 20, take profit 60 to the downside. That's we're looking at dollar strength, immediate dollar strength. Any questions so far? Let me know. If it's all good, let me know as well. Looking for some response, put it into the chat. Then on to the yen. I did this. I was very happy with this on the yen, right? Yesterday at that point, we say it's going to spike down a little bit, or it's going to test this support level. It came very close. It came 6 pips away, and then it pushed right back up, went to 105, 150.60, and then went straight up, pretty much straight up to our take profit of 85 pips. I think I got out at about 80 pips on the US yen, right? Mainly because I saw it threatening to try and push out. I got out of that trade on the US yen, but you can see that it's well within that Bollinger Band. And I think some of you have asked before, and I've showed you this before as well, is that if you did the Bollinger on one standard deviation, you'd see that, look, it's well, when it broke in, it maintained within that 1 and 2 standard deviation. So we saw it pushing, trending all the way to the upside. Okay, so that worked very well on the US yen, good 85 pip up. Robbie's asking, selling the Aussie before it breaks support. Yeah, what I'm looking at on the Aussie is that it's sitting, it's very close, and also a big strong move on the dollar like that is going to lead to that Aussie breaking that support. Most likely going to lead to Aussie breaking that support with good momentum, right? Momentum is going to cause that to break. So that's why I would say could break that point. All right. Then onto the US yen. Okay, so that worked out. So I hope I answer your question there, Robbie. And that worked out well on the yen. I think Ayakame got onto that. Anyone else got onto that? Let me know. I got 85 on that. Now, like I think BL has been sharing in the group, the comments, the running commentary from the Bank of Japan and from the Ministry of Finance in Japan is all about, let me find the headlines. BOJ offers to buy 100 Japanese, in 100 billion in 3 to 5 year JGBs in unscheduled operation, and that's why we saw that come in 3 hours. No, didn't do too much at all. So it pushed down a little bit or halted that weakness, and then currency diplomat can explain FX move by fundamentals. Right, concerned about one-sided sudden FX move, ready to take necessary actions if needed, won't exclude any options against excessive FX moves. What else? There was another couple, Japan ramps up yen intervention warning after BOJ fueled sell-off. I think that's it, right? So, no, there we had that one. Shouldn't tie yen moves to BOJ policy. Hey, if you're not going to tie yen moves to the policy decision, then what's the point? How are you going to tie? What are you going to tie it to? Right. So that's an interesting comment there. But you see here that the comments, the jawboning has started because the US yen is well and truly above that 150 range. Remember last time, a couple months ago, I highlighted this as intervention zone. Now it's at 151.29. The last time on H4 time frame, you'll see that the last time we saw an intervention from the BOJ was at 152, right? At 152. So just be super careful on the yen right now. Okay, just be super careful on the yen right now because that dollar strength, that possible dollar strength is going to see the yen push up. All right, it is sitting in a little bit of that consolidation here at the moment along 151.30, but that dollar strength is going to lead to that push. And the question now is not so much about this consolidation, but is what's going to happen at 152. Is the Bank of Japan going to step in and take action immediately? You see that the last time they did that, right, at that point, it was on a Friday at 1700 hours, well, 1700 hours there before we saw the intervention come in on Friday night. I think it was a Friday about 7 p.m. I was trading that during that event. Right, I was actually there selling it down. I didn't catch that move, but I was selling it down. I think I actually caught part of that move, a good portion of that, right? Because if you check my other posts, I've been waiting for that intervention. So I don't think the Bank of Japan is going to step in during the FOMC meeting. Okay, I don't think they're going to step in during the FOMC meeting. I think that maybe onto tomorrow morning might see not again, disclaimer applies, but we might be seeing intervention maybe during the bond auction tomorrow morning, 11:35 a.m. GMT plus 8. Okay, so you could be looking to buy the yen up. You could be looking to buy the yen up during this news event, during this FOMC event. Above 151.50, so 151.55, you can be looking at a good 60 pip move to the upside, a tight stop of 20 pips, right? Up towards that 152 level. But I would say once it gets to 152, I would be very careful. I'll be waiting to see whether intervention is going to come into place. You, Davey, thank you so much. I really appreciate that. Hey, Jamil, how you doing? So can't deny that dollar strength is likely to see the yen push up, but going to be very careful at 152. Okay, might see intervention there. So with that, then we're looking at the yen. We did well on that. To buy at 151.55, stop loss 20 pips, take profit 60, but we're going to watch out for possible intervention. There we go. Okay, so that works out well. Okay. I'm keen on that. I'm keen on the yen, and I'm keen on that big reversal down as well, but too early to try and guess that right now. Okay, then onto the pound dollar. Actually did very well. I did not get into the pound dollar yesterday, although it did. The setup was very nice. I was too focused on the yen. All right, we said that pound dollar was going to go up, test that level, turn back down, and sell down. It did that. It pushed up, tested that trend line, broke above that 50% level, came back down, right? And then went down, did not go all the way 60 pips. It came down to about 50 and then bounced back up again. So Jamil says, my favorite pair. Let me know if you got into that trade. Now with the pound dollar, interestingly, okay, that's not a good channel. That's not a good channel. A channel needs to look like, wait, why is it not moving? Yeah, channel is supposed to touch both points. Why is it so wide? Okay, like that. Right, so Just take that away. I actually don't like that as a channel. And like just that trend line there. Jamil sees a flag pattern. Yes, so I think you're referring to this pattern. All right, 50 is broken, so we'll take that away, put it to 60, and remove 50. Now, what we have here is that it looks like it's following this trend line, pushing up. I would like to say, look at this. This is going to be interesting. If this moves up, let me just check the range. That's a good 50 pip move to the upside. What I'm thinking, okay, I'll tell you what I'm thinking is that maybe on a dollar weakness scenario, we might see this push up on a dollar weakness scenario, right? Because of that. But I think more likely we're going to see that come down. Corrective. If you see H4, there's a confirmation in a corrective way, okay? Let's have a look at that. So we can look at that, yes. So Jamil, do you think it's going to break down? So do you think that's going to do that? Or that's what I'm thinking. That's what I'm thinking, but okay, back to the H1. It's a bit similar to what we see on the Kiwi. What I'm thinking here is very similar to what I'm thinking on the Kiwi. Well, it's pin bar now, but I think that pound dollar, I would like to see it test up to this point and then turn back down. But I don't see a reason why it should go up. See, dollar index is pushing up right now. What I'll be looking for here is a break of this level. So 1.2130, take profit again, 60 pips, stop loss, no more than 20 pips to the upside there, maybe 25. Okay, so we're looking for that move down on the pound. That's what I'll be looking for. And it's low, the pivot and reject. I'm gonna come down here. Yeah, if it comes down here, then it's a free for all. We'll decide what to do again next. We just want to find the first move. So I'll do that. 1.2130, stop loss 25, take profit 60. 1.2130, stop loss 25, take profit 60. Again, this is on dollar strength scenario. That's one move. The other alternative, the better one, I would love to see. I don't think it's going to happen. I don't think it's going to happen, but I would love to see that move instead. So about there. Again, about 20 pip stop take can be a good 80 pips down, right? And that means that from now through to the FOMC, I'll see that test 61.8 and then turn back down on dollar strength. I would love to see this more than this, because that's going to test 61 and reject back down. Okay, we got a request from Udemy for the euro yen. We can do that shortly. Give me a moment. Actually, I like this a lot more. Okay, we'll keep that there. All right. Then on to the euro dollar. That actually went up quite nicely, almost came to take profit before turning back down. You had noticed that it was way outside of Bollinger. That's why it reversed. Again, another signal on when to get out of a trade, when not to hold on to it. Losing my voice. Then you see here, so that's done and dusted. Take that away. Euro dollar, it's not a head and shoulder as much as it shows that big level. What you could be looking out for, an early move on the euro, if you wanted to try and rush into it, is if it breaks below this point, which is very close. In the next 15 minutes, you're looking at that. 1.055 can be looking to sell it down. We do have another couple of levels down here. Break this point, trade it down. I have slowly starting to have too many lines on the euro. Let's take away a couple. I rather this line before that and this point there. Okay, so euro dollar could be a kind of now kind of trade, because not much else happening. Dollar strength coming in, bit higher risk because you're getting in before, but we're looking at below 1.055. So 1.0545, stop loss 30 pips, take profit, good 60 pips to the downside. All right, you could even go all the way down 90 pips. Yeah, this is one of the kind of trades that if it does break, you have a good profit margin to risk, then I would be looking at selling that. Maybe as the news comes out, I would be in profit already. I could close out before the news, or move this to break even, or secure some profits and let it run. Okay, so that's what that's how I would try and plan that timing of the trade. So euro dollar, I'll be looking to sell down 1.04545. Was it 545? Yes, 30 to 90 to the downside. Where am I? Stop loss 30, take profit 90 to the downside. Alrighty. And yes, that is on dollar strength scenario. Breaking out, it looks like it's trying to break up the consolidation. We'll see the next couple of hours. Down to the US Swiss franc. That did not trigger. Take that away. That straddle, take that away. It did break up. In fact, we did talk about this consolidating between that. Now that it's broken, we could see a big move up to 9166. Take that away. I see that as a good push up. I was thinking that, hey, could this be a dollar weakness scenario where it sits there, weaker dollar pushes it strongly back down, same like what happened here, because we're so heavy on that dollar strength scenario. Could be looking at that. If not, it probably push up. We could highlight that. Let's highlight that as a possibility on a dollar weakness scenario. 9075, stop loss 30, take profit 70, counter trend move, dollar weakness scenario. Okay, so sell on 0.9070. Was it 7075? All right, and then stop loss of 30, take profit of 70. Stop loss of 30, take profit of 70 to the downside. This is counter trend, DXY weakness. Okay. Then, like Demi is asking for the euro yen push right up because of that dollar yen now retracing at this point. Okay, we did well on that one. We're looking at that dollar strength scenario. We're looking at euro dollar possibly pushing down, so that should lead that lower yen pushing up, so that should be a bit of a counter move. What I see here is that it's broken 23.6, it's holding 38.2. I think that if the euro dollar continues to head lower, if it breaks below this 0.95, 159.50, if you look at further downside, so 159.40, you're looking at a stop loss of about 25 pips, a take profit of a good 90 pips to the downside. Right, this is driven, I would say that this move would be driven by a euro dollar weakness, euro dollar pulling it down. It'll pull the euro yen down as well. Okay, but if it doesn't pull down, then yeah, I think it's going to retrace a little bit. Alternatively, is that I'll look for it to come down, test, and bounce back up. Then you could also be looking at 159.70, take profit, good 100 pips, stop loss tight at about 30 pips. So you have two scenarios there based on that 159.50 level. All right, Udemy, hope I answered your question there on the euro yen. Then on to the loonie, that did not happen, take those away. Now we have our previous high at, take all that away. Those are all done. All right, dollar strength scenario breaks above 1.3890. You can be looking at 1.39. Above 1.39, you would have a good 670 pip move to the upside. Stop loss about 35, 1:2 to the upside there on the US CAD. Okay, so quite straightforward for that one. I wouldn't try and do counter trend on that. So we look to buy 1.39, stop loss 35, take profit 70. Stop loss 35, take profit 70. There we go. I like what the dollar is doing. It could come up, test, sit right there. So be looking for that. Okay, F1 above 106.90. FOMC decision to push to 107.35. Okay. Then on to gold. All right. Big reversal on gold so far because of that dollar strength. Right? It broke that 50% level, that 1992 level, but remember, we were right here. We were right about here yesterday, and we said that if it gets past 2000, above 2000, it could get to 2008 and beyond that 2021, but it got to broke above 2000, it got to 2008 right there, that same previous high, and then it came right back down. Okay, so we did quite well. I had a couple of scalps there, but nothing too big on gold. So that worked out very well on gold. Take that away. Now on the dollar strength scenario, we're going to see this continue, maybe, well, most likely push back down. Right? Dollar strength inversely related to gold, so gold is going to come back down. Now, if it breaks that support level of 1972, that trend line is done. We can take that away. If it breaks 1972, we're likely to see 1952. I'll do that, but then I'll check on the 21st of September just to show you guys what happened. Right there. So that's what happened on gold. Right, we saw that push up at 2 a.m. right there. It started reversing back down because of that dollar strength. Right, gold reversing back down because of that dollar strength from 1946 down to 1930 thereabouts. So with that, then coming back to the current, if it breaks below 1972, we could see 1952. There we have it. Gold below 1972 could reach 1952 on dollar strength scenario. There we have it. FOMC prep done, right? As usual, well, I wasn't going to, but I would love to trade together with you guys during the FOMC rate decision, but it's at 2 a.m. I don't want to be yelling and screaming at 2 a.m. So I will be trading. If I see any interesting setups, any interesting movements or an update, if there's a surprise from the FOMC, if they hike rates or if they cut rates, I'll give you my updates on the Discord channel. So if you haven't already, do make sure you join the Discord channel. And with that, I'll see you all on Discord. If not, I'll see you tomorrow, same time, same place. Please remember, help me click that like and subscribe button. Take care now, trade well, trade safe.